right. Good morning, afternoon, or evening, everyone, and welcome to today's webinar on how to improve your supply chain resilience. Before we begin, let's cover a few of the housekeeping items. Firstly, on your screen, you can see multiple application widgets that you can use. Also, please ask questions through the Q&A widget below. And we will try to answer as many questions as possible during the webinar, but we will also leave some time at the end to answer some of these questions. You can actually expand your slide area or maximize it to the full screen by clicking on the arrows in the top right corner. And an on-demand version of the webinar will be made available shortly after the webinar and can be accessed using the same audience link that was sent to you earlier. Also want to make sure you sign up for our e-guide about today's topic. And there's another interesting webinar actually tomorrow. We have a PAX program these days on a new product, which is order management. Lastly, on a legal note, please keep in mind that all information provided in this webinar is presented based on the situation at the time and may not be customized to your specific situation. Great. Now that we have done that part, my name is Matthijs Slangen. I am VP of Sales and Marketing for Flexport Europe. And today I'm going to discuss together with my two colleagues, Marion van Veen and Nick Barber, the topic of how to improve supply chain resilience. Let's start with Marion. Marion is one of our senior managers of accounts within Flexport. She's in our office. She has about a decade of experience in our industry. She's been with Flexport for a long time already as well, and I'm extremely pleased, Marion, that you're joining today's webinar. So, welcome, Marion.
Hi, Matthijs. Thank you. Very pleased to be here.
Great. The second one is Nick Barber. Nick Barber is one of our account executives currently focusing on the enterprise segment within Flexport. So Nick, just as Marion, has a background in the logistics industry for almost a decade and has been with Flexport for some time as well. So Nick, very pleased to have you here on this webinar as well, and welcome.
Good afternoon. Thanks for having me.
Great. Okay, so what we're going to do in the next hour is we're going to share with you some of the discussions, some of the findings, some of the observations that we have actually gathered over the last 12 months while discussing with our customers and with our prospects on how to increase resilience in your supply chain. We've actually categorized those examples in 3 buckets, if you will. And actually, those are the 3 main action items or things that we think should be on top of your list when you try to make your supply chain more resilient. Now, obviously, we believe that this topic is extremely relevant these days, especially because I think we can all agree that 2021 will be a very turbulent year. So let's start by saying that probably nothing beats what we have seen happening in 2020. It was unprecedented and echoed by many as a unique combination of different circumstances. But it would be incorrect to assume that the challenges are all behind us. On the contrary, actually, if we would list all the different scenarios that could happen in 2021, there are actually not that many scenarios that we can actually rule out. You could almost compare these scenarios more with a bingo card than with a proper forecasting attempt. If you would build a bingo card, it would look a little bit like this, right? As you can see on this bingo card, there's many variables on it. The demand of retail will drop due to increases in services expenditures for instance, because we start traveling again. Demand will rise in heavy industry markets or in automotive particularly. Carrier space will remain tight. Rates will not really stabilize in the next quarter. Rates will stabilize, right? Ocean freight rates will drop close to pre-COVID levels. Carrier reliability will remain volatile, and many, many more here. So with so many uncertainties there ahead of us, it's again extremely important and building a resilient supply chain to be actually top of your list. Now, maybe it's good to the word resilience is an interesting one. Maybe good to give a little bit more of a definition of what we mean with resilience in the supply chain context. Marion, would you have a definition of how you would see resilience?
Yeah, definitely. For me, resilience is the ability to adapt to changing circumstances. The world is full of challenges, and many of them we cannot influence. And for me, it's to focus to adapt. Focus to adapt to this change, so that we can recover quickly when something out of our control happens, in order to survive.
Clear. Nick, how about you? Would you echo that?
Yeah, for me, it's deploying continuous effort to succeed from setbacks. Resilience is getting knocked down and bouncing straight back on your feet.
Got it. So what I hear both of you say is adaptability, ability to recover quickly, bouncing straight back are important areas or items that you need to take into account when you're building a resilient supply. I think one of the other elements there is being resilient in many cases actually also means challenging the status quo a little bit, right? So processes that have worked for years might not be the best fit for future situations anymore. And as mentioned before, predicting the future is going to be a very difficult exercise, right? So the number of variables is simply too big. So that forecasting exercise is very, very tricky. But on the other hand, you can predict your ability to respond to these changes, right? And that's an important one. And this is a little bit where scenario planning comes into play, right? So if situation X will happen, I'm able to respond to this appropriately. And especially if you compare this to 2020, which for most of us was a rough year, you could ask yourself the question, what have I actually changed in my setup to be better prepared? I'm actually very interested to hear what this audience has done there. So on the screen, you can see the poll. So please select your answer here related to this question. So what changes have I made in my supply chain strategy actually to overcome the changes that we're seeing there? And there's three answers there. One is yes, we've made the changes. The second one is yes, we're thinking about making the changes, but we have not yet finalized them. And the third one is no, there's actually no need for us to change. So please answer or use the poll right now to answer this question. Curious to see what the outcome is going to be. As it looks like right now, I'm seeing 100% yes, we've made changes. So that is extremely encouraging to see. And it stays 100% right now. So this is exactly what we're seeing as well, right? This is also why we've been able to come up with a lot of examples of how companies are actually making their supply chain more resilient. I see a change there right now, right? So it's more 50-50. So yes, we've made changes, or yes, we're thinking about making the changes. We actually didn't anticipate a lot of the audience to answer this question with no, there's no need for us to change. If that answer would be no, then either you have weathered the storm pretty well, or you're willing to take a big risk next year. Nick, if you look at this poll here and you see a 50-50 split, does that resonate with what you hear from customers?
Yeah, it's encouraging that that everyone's either yes, they've made changes, or thinking about it. I think kind of rule of thumb, if I think back the past 6 months to shippers I've been speaking with, I'd say around 70% of them I speak with are very cognizant of the need to change parts of their supply chain. So it definitely reflects this. Great to see nobody has stayed with the status quo. I have spoken to some that do, but I think this is very much in line with what I'm seeing. People are either have made that change now, or are about to, or are certainly thinking about the need to make that change.
Great, great. Yeah, thanks for that, and very insightful indeed. Let's go to the next topic. So we've been talking about, let's say, being resilient to be a very important topic here when you're deciding or determining your supply chain strategy going forward. What's important here is that what we've actually done is we have categorized those examples into 3 different topics, and you see them on the screen right now. So on the one hand, breaking up your supply chain decisions. The second one would be assess bottlenecks in your supply chain. And the third one is go back to the core, but be able to switch gears. Those are the 3 focus points that we would like to discuss and address today. Now let's start with that first one. Now that we have actually established that the ability to respond rapidly is key, it would be very interesting to actually look at the decisions that we need to make. A logical response actually to less control is to see if you can tighten the agreements and have more focus on commitment. I would agree that this is probably not a bad thing to do, but at the same time, you need to ask yourself the question, to what extent this actually serves the purpose. If there's so many uncertainties, why would you try to make your decisions and agreements even more strict or overarching? Imagine what happens if the market all of a sudden changes. Are you able to keep up to the agreement, right? Or even worse, are you limited in your response strategy to the agreements that you actually have made or the decisions that you have taken? So by increasing the number of decision points, could be with firm commitments actually, you will be able to respond adequately and more rapidly to the changes in the market. Now, let's give some examples here. So if we look, for instance, at volume prediction, right? So we're talking about that first topic. On the slide right now, you see an example of a weekly volume pattern of a customer, right? And this customer ships about 350 containers throughout the year. That's a little over 6 on average per week. But if we include the seasonality that we see here, we have actually only 43% of the weeks where the volumes actually go above these 6 containers a week. And in some cases, it's actually a lot more. So if you're making a fixed agreement for the full year, it will, A, make it very difficult to deliver on the exact promise, as you can see in this example, and B, it will not allow you to take advantage of the changing market conditions. So splitting this up, right, what we have done here, and actually splitting up the decision-making process here, will allow you to be more resilient or to be more adaptive there. So you could split it up between a fixed part, a semi-fixed part, and a volatile part. You can still make your structural volume commitment, but at the same time, it will allow you to respond better, as I said, right? So this is a slightly different way of how you can look at volumes. And just simply looking at your forecast by looking at your annual volumes and divide them by the number of weeks is not going to cut it anymore. And that's also not where, let's say, a lot of suppliers, carriers are actually looking for. Now, this example, you could approach that, or you could apply that actually for different dimensions, right, for your supply chain. You could also use this by dividing your business into where you need less reliability and probably lower rates, and higher reliability, as a consequence, also higher rates. You don't need to look at your whole portfolio as one whole and select one. Actually, you can use that same division here to cut up, let's say, the decision-making parts in your supply chain. You could do the same thing for a centralized sourcing strategy versus a diversified supplier sourcing strategy. We have some great examples on that one in a minute. Or when you look at your carrier strategy, right, the single carrier strategy versus multiple carrier strategy. So different elements that are related to your supply chain, we see that more and more companies are chopping up their decision-making process there in smaller parts to allow them to respond to changes in the market. Now, let's go to some real-life examples. As mentioned in the introduction, both Marion and Nick deal with our customers on a day-to-day basis, and they're I'm pretty certain that they have a lot of clarifying cases where actually breaking up the decision-making process became reality. Marjan, can I, on this specific topic number one, can I start with you? Would you have an example here that relates to this topic?
Yeah, surely. Let me kick this off. I would like to start off with an example of a German company that is active in the online retail industry. And well, we've had severe market circumstances, I would say 2020. And this client actually faced a double hit. The freight rates increased. That was hit number one. And secondly, in the markets they are active, the demand for their products increased significantly. So the suppliers became more powerful in the supply chain, I can say. So they decided we're also going to increase the actual purchasing costs of the product. And increasing freight rates and increasing purchasing costs, that was not sustainable for this company. They already had a scenario planning in terms of, well, do we have to completely rely on sourcing out of Asia, or do we need further diversification of suppliers? And actually this double hit, which they couldn't absorb, led them to make changes. They decided we have to start sourcing from, for example, Turkey or Northern Africa in order to be able to adapt to the current market circumstances, and to survive in the business they're active in.
Got it. So the double hit actually accelerated this need for diversification or breaking up the supply chain. Thanks for sharing that, Marjan. Nick, would you have a similar or different example there?
Yeah, I also see something similar to this with a key client in the UK. They're in the home renovation sector. They've suffered quite heavily from the issues in China, carrier unreliability, equipment shortages, and more importantly, those rising freight rates. And the outcome at board level of these past several months has triggered a request internally for the commercial purchasing and buying teams to really start looking at diversifying a percentage of the vendor base away from China, particularly for that inventory that has a high turn count. Their supply base in China is around 95%, but in the future, they will look to reduce this a little, to spread that risk and ramp up production with some of their smaller vendors in places such as the UAE and Eastern Europe.
Got it. This is a topic in the beginning I mentioned already. There's many different dimensions that you can look at like splitting up your decision making. Marjan, would you have an example in a slightly different area?
Yeah, I would like to bring up an example of a Dutch retail client that looked into, we need to get more control of the supply chain. We also need to diversify risk. This company, their traditional peak season is from November until January, which coincides with the traditional Chinese New Year peak season. And this year they faced considerable difficulties in getting equipment, getting space, and this was actually endangering their sales season. And this made them realize we have to break up our supply chain decisions. We have to change something here. They're now looking into changing their never out of stock orders, the strategy for their never out of stock orders, to already spread them out over the year and to start shipping them in the period September, November. Yeah, that would have as a result an increase of warehousing costs, an increase of working capital. At the same time, they would reduce the potential risky period of shipping during Chinese New Year, and also decrease the expensive shipping cost if you are bound to shipping in the Chinese New Year period. So that would be another example for you.
Yeah, so that's more diversification or split up decision making from an inventory perspective. Great, Nick, would you echo that? Do you have a similar example there?
Yeah, I have a client who's done something very similar, perhaps taken it to the next level. A furniture company, in the north of England. They also have a peak shipping season, sort of Q4 through to Q1. They have a very small supplier pool, sort of Shanghai, Wuhan, and Ho Chi Minh. And they were suffering from the equipment shortages in China, particularly from Wuhan. And fortunately for them, because of good forecasting, in late November, they decided to make a snap decision and switch the raising of purchase orders, of new purchase orders, to their supplier in Ho Chi Minh, which was around 25% of the forecast. And they were able to therefore negate the burgeoning equipment and structural issues we were seeing in China, which was causing backlogs and delays, particularly for many of their peers. And they managed to shift that production to Vietnam. Now, likewise, we saw that as the situation spread in the region and as Vietnam became affected by these structural issues and China's issues started to relax a little, that the client just as easily switched those forecasted POs back to China. So what we see is that shipments ex-Vietnam in February and March are peaking, and the current forecast is showing that May and June will swing back toward China. So for them, agile decision-making really allowed them to navigate the regional challenges that popped up.
Got it. And making sure that you can switch is indeed also a very important element of actually increasing your resilience. We'll get back to that topic a little later on our third topic here, I would say. So a great one. Marianne, maybe a last one?
Yeah. Nick just talked about adaptability. I would have a similar example there of another Dutch retail client that has a big promotion campaign coming up. And they also face the difficulties with getting enough capacity in order to move all their promotion orders. And they realize that flexibility, so adaptability, is key. And together with Flexport, they decided we have to come up with a so-called priority list, so that our freight forwarder has full insight in which orders need to arrive by when, and what shipping method we're willing to use for that. So in that priority list, they defined all their orders as being either A, B, or C priority, and based on that, they were actually giving us full decision rights. And we exactly knew what needed to be shipped when. We could fully focus on priority A orders, and when these were shipped, we could move forward to B and C and onwards. So this is, I would say a further example on flexibility and adaptability in order to give your supply chain a boost.
Yeah, got it. So this was not only breaking up your supply chain decision-making, but actually also making sure that in that decision-making, other partners, and in this case, the 3PL, in this case, us, were fully involved in that decision-making process. Clear. Okay. Thanks for sharing these examples. I think those were very good in actually explaining a little bit what we mean by breaking up your decision-making. Let's go to topic number 2. And topic number 2 is very much related to breaking up your decision-making process. And this is actually the necessity to identify the bottlenecks that might hinder you or your supply chain strategy from achieving the desired results here. Right? It's a little bit based on the theory of constraints of it. We just shared some great examples on the different adaptations from several companies, which make a lot of sense, I would say. At the same time, it's extremely critical to look at your supply chain end to end, right? So solving an issue on one part of the supply chain can completely be mitigated if it's offset by a new roadblock somewhere else. Somewhere else in the supply chain, and I need to say there. And as we are changing our setup, we bring along new unexplored events. And in many cases, these bottlenecks then come from 3 different areas, actually, right? The first area is a bottleneck where you did not really expect them to come from, right? So you didn't really have that in scope. The second one is areas where you were not focusing on because you were dealing with other priorities. Or the third one is the bottleneck arises in an area where you have no visibility or insights on, right? You simply found out too late. So these are, let's say, the 3 different areas where bottlenecks definitely can arise. And I believe we have a couple of very good examples where those bottlenecks tend to occur, and which of these three different scenarios was actually involved. Nick, can you? I'm certain that you have a few examples of where you run into bottlenecks together with customers lately, right?
Yeah, sure. We have an e-commerce customer in Germany selling in the kind of fitness, leisure, and beauty sector. And they're a company that tries to look ahead at all times, and they try and predict which scenarios are likely to happen. And when they noticed the equipment situation in several ports in China becoming a major issue for their flow of goods, they decided to very early on diversify the number of ports they were using. You know, same supplier, same destination, just a different route. And this strategy turned out to be quite successful as they managed to get hold of more containers, and consequently they could ship out more. But the major bottleneck here was actually the trucking partner in China. They had used them for many years already and were proven to be a reliable partner. You know, part of this was based on the fact that they knew their way around the nearby ports, they knew the processes, the local formalities, escalations, etc. But for the more remote ports, however, they were kind of less accustomed to those procedures, and this actually resulted in higher trucking transit times, which were a lot longer than normal. You know, this resulted in several containers being left on quay. So even though this client carefully thought of, alternative scenarios for their goods, a relatively small part of the supply chain, which could have been solved upfront, ended up actually creating some substantial delays for them.
Got it. Okay, so this was actually caused a bottleneck in the area where you were not focusing on, because you were probably dealing with other priorities there. Here, Marianne, would you have an example there as well?
Yeah, and I think specifically in the area where a client was not expecting a bottleneck to appear. Example of a watch manufacturer, and it's known in the market that there is a limited number of battery suppliers out there. And so they were very focused on having a scenario planning in terms of what if one of these suppliers will not be able to fulfill our demand. What can we do? And they even looked into Mexico, for example, to just find out like what can we do in case something happens. What they actually found out on the go and what they did not expect was that actually their gift box suppliers appear to also have a bottleneck on the supply chain. They figured out, or they found out that often the cargo ready dates were not met by the suppliers. So these intended gift boxes were intended to move by ocean, but often if they would have been moved by ocean, they would hamper the outgoing orders because there were no gift boxes to actually pack the watches in. So they had to be moved by air freight instead in order to still make the customer promise. And so they realized we have to do something here. This bottleneck is impacting our supply chain considerably. So they decided to have more frequent but smaller batch size orders to their suppliers in order to have a constant flow of gift boxes, if you will, so that their outgoing orders would not be further impacted.
Clear. So a bottleneck actually that occurred in an area where it really didn't exist. That's very clear. Would you have another example while you're on a roll?
Of course. Let me bring up an example of the third bottleneck. So where we say there's no visibility. This would be an example of a Scandinavian online retail brand. They have a sourcing strategy. They source out of Asia. They also source out of Turkey, and especially their fast fashion is produced in Turkey. And what they realized at a certain moment is they were not having a similar visibility as that they were having on their orders coming out of Asia. They often only found out which styles were actually produced or which styles made it to the truck upon arrival of the goods in their distribution center. So they were lacking in actual visibility in terms of which styles made it on time, which styles can make it to this specific promotion week, if you will. And especially with a short transit time out of Turkey, this was having a significant impact on their supply chain. And this client actually asked us, can you help us here? We are used to your visibility product out of Asia. Can you do something similar out of Turkey? So together with this client, we've set up our Turkey trucking solution into Northern Europe, so that they would already have SKU visibility at the time of the cargo leaving the factory in Turkey.
Yeah. I think we've seen quite some congestion at the different ports as well, but especially in the UK, right, Nick? We have an example specifically around a bottleneck that was caused by this, and maybe also how that was solved.
Yeah, sure. I have a customer in England that imports from Asia on FOB terms and Turkey on CIF terms, so with the supplier controlling the transport and logistics. And during lockdown, with people working from home, demand surged for this company's products, particularly on the inventory from Asia. So when the port congestion issues in the UK took hold, it created some serious clearance and delivery bottlenecks. The Turkish volume, which was controlled by their supplier's Turkish freight forwarder and the nominated UK agent, the client was experiencing kind of slow updates, poor communication, particularly on important milestones such as ETA and perhaps SKU level visibility and information, what inventory is in what container. And this actually resulted in the client having difficulty prioritizing containers for delivery, balancing the available warehouse slots they had, depending upon the need for certain prioritized inventory to meet their customers' demand. Now, there was a real need to just keep on delivering, as lots of containers were already incurring very high demurrage costs. Plainly, the customer was prioritizing the wrong containers for delivery. Non-urgent stock was in the warehouse, and that critical stock was left on the quay. So the client kind of worked backward on a root cause analysis of this and trying to figure out why they could not better control the flow of volume. And it actually turned out to be based on the Turkish lane, where indeed they had limited control and virtually no visibility. For instance, they weren't able to slow down purchase orders at origin in Turkey to ease the bottleneck in the UK, or indeed quickly prioritize certain deliveries on inbound containers, for instance. And the result of this was that they ended up switching terms to FOB to give them that control they needed, that agility. It was the first time they'd ever done this. And if anyone on this webinar imports from Turkey on CIF terms, you know that it's quite a feat to convince the manufacturers to relinquish that control and change the Incoterms. So the customer now has one freight forwarder controlling and moving all inbound cargo along both their lanes, which enables us to work closer and smarter with their warehouse. We actually manage their deliveries now based on inventory demand, not last free day. And ultimately, this allows us to reduce their cost by better managing their free time.
So this is really looking at it end to end, and I specifically like the root cause analysis that has been done there to find out where in the supply chain that issue really lies. Great example. Marielle, maybe for you, last one, right? These problem solving or root cause analysis exercises. Do you have an example of that as well?
Yeah, I would like to share an example of a Dutch company that is active in the furniture market. Together with this company, we actually organized a whiteboard session to identify their current supply chain processes. So really going all the way from order creation to supplier, all the way until invoicing, etc. What are you currently doing? How are you doing it? And by going through that process, the client actually started to realize their bottlenecks. And especially for this client, they are very much in a growth mode, which is great, but they also found out there's no actual room for process optimization or automation. We're just too busy. And so by having that whiteboard session, they were able to make a priority list in terms of what do we want to change or where is the biggest need for change. and what are we going to do there? And they decided their first priority was we need more visibility in our customs process. And we need expertise. We need updates in case of changes in preferential codes. We need abilities to support growth. They are planning to internationally expand, but that also comes with needed expertise and support. So really by having that session, they came to realize these are bottlenecks in our supply chain, and this is the most urgent one that we're going to tackle first, and from then we move on to the next priority, if you will.
Yeah, very good, very good. So lack of visibility again, clearly playing a big role in that one. Thanks for sharing these examples. So I think, in conclusion, right, if we look at this topic of carefully assessing bottlenecks in your supply chain, in order to reduce the impact of supply chain bottlenecks, we would actually advise you to do the first part is make sure that you zoom in and zoom out on a very frequent and regular basis, right? Zoom in to the problems that need that urgent attention, and zoom out to see how it will impact your total supply chain. You need to zoom out to plan different scenarios from your business as a whole, and zoom in to understand how each event in your supply chain will be impacted. This requires a little bit of a disciplined approach, zooming in and zooming out, right? Because it's very easy and very tempting to get stuck into one of those two motions. So either you're zooming in too much and you forget about a few of the other ones, or you zoom out too much and then you don't have the eye for the detail. So doing this on a constant basis is an important element to make sure that those bottlenecks will not happen that much. That's the first part. The second part is you have to stay alert here. You need to make sure that you equip yourself with the right set of data that will allow you to respond fast to potential roadblocks. Rapid response will actually prevent a lot of the hiccups to become real bottlenecks. That's the second part that we would like to stress here, and that comes back in a lot of these examples. Now, staying alert is actually also an important theme for our next topic. And the next one, this is the third out of the three, go back to the core, but be able to switch gears, right? So in times of uncertainty, you will see that everyone starts to look around, right? You ask yourself, what's happening, right? Now what? How to respond here? That's a logical. So being focused and deciding with speed will become more important than ever, right? It will take a while before everyone has found its place and rhythm again and is aligned with their colleagues. And we've seen that many companies have actually done this, right? So quite a few have made very conscious decisions to stick to their core and leave some of the more adventurous projects on the shelf for now. Or if you have seen that part of your core is actually not going to help you through the crisis, then you will need to shift, obviously, immediately to another part or another model, of course. But that's pretty obvious. But speed is important and the direction is important, right? So speed plus directions equals velocity, which is actually what you're trying to achieve. So it's very important to have those two elements in hand, you know, being focused and deciding which. Now, let's recall our bingo card that we showed a little bit earlier. We concluded already that uncertainty and volatility is there to stay for a while. So this probably means that you will need to shift gears a few more times going forward. Being ready for rapid expansion, and on the other way, you know, you also need to stick to the core again. Are scenarios that you really need to plan for, right? At Flexport, we've seen this as well. We had to hit the brake for our expansion plans for a moment in Q4 to fully focus on our current customer base, right? Which was required, and it requires really everyone's attention. And at the same time, we've shifted gears again as soon as we saw that the market was easing up a bit. But this is not an easy exercise, right? So hitting the brake, shifting gears again, and definitely to make sure that everyone in the organization is on the same page. Before you know, half of your organization is still in third gear, facing the issues that you're seeing, and the other half is in fifth gear already. And that causes a lot of uncertainty and also chaotic situations in your organizations. This going back to the core and being able to switch gears. I think that our customers are essentially doing the same thing, right? Marion, maybe you have an example there?
Yeah, I would like to share an example of a few, actually a combined example of a few Dutch retailers. COVID hit us last year, still hitting us, and a lot of shops were closed as a consequence of that. Certain food-related goods there's always demand for that, such as bananas. Everyone will always there will be a need for that. But for certain products, when shops close, for example, it will be more difficult. How will you be able to sell your goods? And for these retailers, the example that I would like to share is they were focusing on international expansion, and they actually realized this is not the right timing at this moment. We have to close down stores in the international markets and really focus on our core markets, which in this instance were Netherlands, Germany, but also e-commerce. So going back to the local market, to the core market, in order to survive. And for me, that needs to be a top-line decision. If you really want to focus on the core and put international expansion on hold, the requirement for that is that the strategy needs to be super clear and internally aligned in order to make these tough decisions. At the same time, these retailers have closed down stores now, but they are focusing on, as soon as the markets opens up again, what can we do? How can we switch gears in order to move forward?
Yeah. Nick, do you echo this? Do you see this as well?
Yeah, I actually have more of a kind of general observation on this topic, on kind of the topic of rapid expansion. You know, most importers, their demand has grown a lot the last since COVID hit. And I spend a lot of time speaking with shippers, and what I see a lot of these past months is that it seems that a lot of shippers are pulled in two different directions currently. You know, one hand seems to be dragging them back into the chaos of the past several months, forcing businesses to operate on a very tactical level, stealing their time and attention on current issues. Imports team operating in a very reactive manner and really living day to day. But then their other hand seems to be pointing forwards. They know one thing the past several months has taught them is that they need to make strategic changes in their supply chain. You know, this could be utilizing the supply base, utilizing better tools and technology to drive that more agile decision making and keep up with that rapid expansion. I think a lot of companies can envisage the pain and problems and conceptualize what they need to do to fix it, but there currently seems to be no urgency, no line in the sand that they draw to kick off that strategic change. And I actually think a lot of this has to do in part with the current reluctance of carriers to offer any fixed or longer term deals. And I think many shippers seem to be drifting along in the doldrums of Q2 a little, delaying any real decision making to their supply chain, when actually what we are saying to them is that now really is the time you need to make that change. You need to catch the trade winds and power full steam ahead, towards that horizon of change, and set yourself up for both a better H2 22. I think the worst thing is doing nothing, covering up the cracks, reverting to the old normal. In fact, we live in a very different world now where new normal is here to stay. And I think a lot of businesses, should be planning for that.
Yeah. You broke up a few times, but you bounced back really nice. So that showed some resilience there. But I think we really got the message there, and it's an interesting observation that you have there. Also coming back a little bit in the poll, right, where we see that 50% of the people are actually thinking of making changes that have not been. Part of that is probably also because all of these uncertainties, right? So I think it's right. It's important to make those changes now, but you also have to make sure that you base them on as much information as possible. Based on that observation, Marion, do you share that? Do you have another example that strengthens this theory a little bit?
Yeah, maybe to close it off as a last example for this third topic is an example of a company that is active in the accessories market for laptops, and the whole working from home market, I would say, led to a search for their products, and they realized our suppliers can only produce so much. So we may have to prioritize in terms of, what kind of orders are we going to place to our suppliers. So they really decided to prioritize the business about being able to work better from home in order to meet demand as good as possible. At the same time, they also realized that markets will open up at some time. And that then also the demand for the working from home products will change. And they're already making plans to, okay, if that happens, we have to adapt quickly to focus on expansion of our other product groups in order to keep demand up for us as an organization.
Yeah. I like the example indeed. This is truly where you see switching gears is an important element. Thanks for sharing. So, great insights, I would say. I like them a lot. Let's maybe try to see if we can recap this. And by the way, if anyone in the who's attending this one has a question right now, feel free to add it to the Q&A, and we will see if we have a few more minutes at the end to answer them. But let's first go to the wrap up here, or at least the three things that we would really like this audience to take home, and to try to see if you could implement this when you're trying to increase the resilience in your supply chain. The three areas that we have identified are on the screen, right? So breaking up your supply chain decisions. Secondly, carefully assess the bottlenecks that you see in your supply chain. And thirdly, go back to the core, but be able to switch gears again. And in order to execute really on this, we would advise you to do the following. Firstly, you have to make sure that these three topics are an integral part of your cadences, right? So quite literally ask these questions in a very structured and disciplined way. So are we, let's say, breaking up our supply chain decisions in a little bit more granular way? Are we doing this? Are we able to zoom in and to zoom out and to assess those bottlenecks? And can we actually switch gears? So this is really how literal we would actually would advise you to look at those three topics, and do this in a disciplined way again, right? The second part is you have to make sure that you have the data and the visibility to make these decisions and answer the questions. The direct consequence actually of not having the most accurate data at hand is that decisions are being postponed, or even worse, not made at all. And that will be absolutely detrimental for companies that strive to be more resilient. So we would really like you to take home these three topics, these three items, and then also reflect on the different examples that we have given there to see where and how this could actually improve the resilience of your supply chain. Before we go to the Q&A, I would, let's see. No, we can do that right now. I'm sorry. Let's go to the Q&A. I'm checking I see a few questions coming in there. The first question is: does the level of resilience differ per industry? Nick, do you have an answer to that?
Does the level of resilience differ per industry? I think so. In some examples, in the retail, fashion, homewares, furniture spaces, I think it's safe to say that resilience in the supply chain does differ. I think adapting to your own unique setbacks is kind of pivotal to each individual company. However, I also do see some industries that practice less resilience, very much a need to just have stable rates, very low rates. This tends to be for kind of inventory that is, very low margin products, very low value, to make sure that cost of shipping is still viable for them. But on the whole, and particularly if your inventory has a high turn count, I think resilience I'm seeing that a lot. So I think, to answer, in sum, I think, yes, most industries are practicing different levels of resilience, just doing it in different ways.
Got it. Marion, do you have anything to add to this question?
Well, I think Nick actually answered it pretty well. I think already the whole COVID situation, and I think the examples that we shared during this webinar show that a lot of industries have been impacted as such, and also needed to show different levels of resilience. So I would say across the industry, levels of resilience may change, but I also dare to say that due to COVID, some industries have faced an immense increase in demand. Others have seen a huge decrease in demand. At the end of the day, all companies needed to be resilient in some shape or form in order to adjust to this new environment.
Yeah. I would agree. I think it's safe to say that there's no industry actually out there that hasn't been impacted by it, right? But the impact has been probably a little bit different there. I see another question there. How is Flexport dealing with breaking up supply chain decisions? Right. So our first topic. Would you be able to comment on that one?
Yeah, shall I take this one, Nick, first? Then sure. You can give your opinion afterwards. How I see it in my role for Flexport, we are consultants. So in that sense, we are an extension of the client, if you will. So I would like to sit at the table with the client if they're thinking about making these decisions, so that we can bring in our experiences from other clients, so that these clients can make a better informed decision, if you will. Nick, do you have something to say?
Yeah, I think that's good. I think it's a good question, right? I think from our point of view as well, like dealing with our suppliers, the carriers, I think one thing we're doing is using reliability data to procure and offer different services to our customers. For instance, we may offer a one carrier service that may be subject to role or equipment availability. It's going to be lower in rate, but has a higher risk factor. Likewise, we'll procure, premium products that has good on-time performance metrics. The rate will be slightly higher, particularly offered to customers with those urgent purchase orders or the kind of the must-ship shipments. Then we also have multiple carrier options at a different rate level. That's more in line with the market and allows us the flexibility to place bookings with a select carrier that matches the client's desired must-arrive-by date. So I think we are taking the decision during all of this to kind of drive transparency in the customer offering through the segmentation of the offers that we procure.
Got it. Okay, so that's actually also, you're combining data, on schedule reliability, actually with diversifying the product offering to allow also our customers to make better decisions, or at least to split up their decision making. Yeah, that's. Let me see. I see another question there. Do we have an example where core retail business actually shifted to online retail business, and what are views on this decision? On this decision, keeping in mind the resilience. That's an interesting one, right? So I think we have seen that a lot. Nick, would you mind taking this?
Yeah, just come to mind. It's a customer. It's been with us for a long time. Their main route to market is via bricks and mortar, and they had maybe 20% e-com, and it was obviously a growth path for them, both here in Europe and in the US. And it was, I think, if anything, that the pandemic actually enabled them to turbocharge that shift towards e-com. They already had the building blocks in place, like they had the shoots sprouting up through the soil. So that's to say they already had the kind of the basic infrastructure and route to e-com set up. I actually think the pandemic turbocharged this, because when their revenue stream turned off with bricks and mortars being closed during lockdown, their resilience allowed them to quickly pivot those purchase orders away from the bricks and mortar retailers and try to fulfill them through the e-com channels. And I think one thing they did quite successfully was really leverage their internal teams, their commercial teams who were managing the e-com providers. Whether it's the likes of maybe a Shopify or Amazon, or even their own website sales. So on one hand, they were at a disadvantage from their main route to market being bricks and mortar, but they were pretty nimble as a small business, pretty nimble to shift towards e-com to show kind of some resilience in the face of things.
Yeah. And I think on top of that, like one of the differences, or at least what we have seen, is that when you're shifting from, let's say, the core retail business to a more online one, it's also very important to adjust your inventory levels. So you need a little bit more inventory in the different locations to make sure that you can service your customers directly in that sense. That's probably also one of the elements that really impacted the capacity situation, right? Because many customers were actually shifting to a more like an online retail model, needed more inventory, and actually started shipping a lot more, right? We've seen that as well with a couple of our customers, where we saw those volumes really going up. So that was definitely one of the decisions that many shippers have made also when they shifted away from that model. Hey, this is a pretty specific one, but Nick, you were just talking about Amazon. Based on your experience, sendings from China to Amazon UK, which Incoterms would be better there, FOB or ex-works? And I think that's a pretty specific one. Maybe good to take this offline and get the details there, or is there anything you would like to add here?
Yeah, I can respond offline, but I think to answer just quickly, I say a lot of it depends on the trust you have in your freight forwarder to have it on an ex-works basis versus the trust you have in your supplier to have it on an FOB basis. I think if you want full end-to-end door-to-door visibility, that ex-works perhaps gives you a little bit more control. But obviously FOB is slightly cheaper.
Okay. Hey, we have another question here. What's Flexport plan to deal the shortage of containers or shipments out of China, right? So I think, this is an industry-wide issue, and I think we've spent quite some time in different webinars also explaining a little bit where the equipment situation comes from, or where the challenges come from, and what carriers are actually at the moment trying to do to solve for that. How we see what our role in that one can be, and what we do with all of the challenges that we're facing there, is we have to make sure that we stay on top of the equipment situation as much as possible in the different ports, and have that close line together with our carriers. Last but not least, this information needs to be channeled, or at least it needs to reach all of the partners in the supply chain, or the stakeholders in the supply chain. I think that we cannot really solve the equipment issue. I think there's a lot of carriers actually doing, like if we see the trade balancing back a little bit more with, for instance, with a little bit more export from Europe to Asia in this case, it will solve the equipment situation a little bit better. So there's a lot of efforts taking place there. Our role in this one is to create that visibility and to show to all of our customers exactly what's going on. And again, this is related very much to the topic that we discussed today. The more info you have in an earlier stage, the easier it is to respond to those challenges. And that's really what we try to do. We try to communicate on a very direct and open way with everyone involved in the supply chain. I see a couple more questions, but we're running out of time, and we want to be really respectful of everyone's time and agenda. I want to finish off here with thanking Nick and Marianne as well to join this webinar and to share a lot of great examples and make it a super practical webinar I think with a lot of very useful points. So thank you very much for that. If there's anyone in the audience that wants to go a little bit further into one of those examples or on the topic as well, feel free to reach out to us, and we're more than happy to have that discussion with you. With that, thank you very much, and hope you join us again on one of our next webinars. Thank you. Bye-bye.
Thank you.